Welcome back to the show, and let's shift focus to some of the earnings candidate then. And Mahindra Logistics is in focus. The stock is down about 6% because this time the company has reported a loss of 17 crores versus a profit of 1 crore in the same quarter last year. And if we talk about the margins, that too has taken a hit of almost 1% over there. So let's try and find out more onto the earnings and what is the outlook going ahead. And for this, we are being joined by the management itself. Rampraveen Swaminathan, MD and CEO of Mahindra Logistics, is joining us on the show. Hi, very good morning, Mr. Rampraveen. Firstly, largely the numbers have come below the street estimates. So what could be the reason for this underperformance? And when it comes to the revenue and the margins, what were the factors at play at this point in time? Because it was a festive season in Q3 that we have seen. And going ahead, will we see any moderation in the demand to continue in Q4 as well?
On the revenue side, we reported a 5% year-on-year growth in our revenues. We were impacted to some extent by consolidation and site closures by our customers earlier in the year. And excluding the impact of that, revenue actually grew around 10 to 11%. Sequentially, some of our smaller businesses like freight forwarding and express actually grew in double digits. On the margin side, I think you would see most of the businesses are in a steady state in terms of margins. There is the impact of the acquisition made last year of Rivigo, and that business did show improvement in terms of the losses. Losses shrunk by 10%, but the impact of that was still fairly large at a consolidated level, and that impacted our earnings. Going forward, I think we did have a quarter of strong order intake across all our businesses, so we expect revenue to start, showing much more stronger growth in the coming quarters, especially in the automotive and manufacturing spaces. The Rivigo business continues to be in a turnaround phase, and I think we will start seeing losses shrink further as we consolidate returns. So we should start seeing some of that improvement coming through our numbers at an earnings level.
Good morning, Mr. Swaminathan. This is Vinny joining in the conversation as well. What we also want to know, because there are a lot of headwinds, there are global headwinds that are there in terms of trade. Do you see that actually impacting the company's freight forwarding business? Is that something that is a possibility in terms of the impact that we could see?
I think the forwarding business, to a large extent, has kind of bottomed out. We're not seeing the sharp impact which we saw in the earlier part of the year. Sequentially, the business grew 11% in revenue terms, and we were able to hold our margins as well. This quarter, with the Red Sea impact, there has been some improvement in prices due to the impact of that. We'll have to see how long that holds. But overall, I think it's an upward direction rather than downward pressure going forward.
But your overall growth outlook for 3PL business and the important growth levers going ahead, what would that be, and which is the segments that are showing strong growth as of now?
So I think our 3PL business, in addition to the automotive part, is heavily weighed by our consumer and manufacturing segment and the e-commerce segment. We had a good peak quarter in terms of festive volumes. Festive volume in the quarter grew around 20%. That, of course, is offset by site closures earlier in the year, which did impact year-on-year growth. We're optimistic about growth in e-commerce, which we think will be strong in the coming quarters based on the order intake we've had. The other big driver for growth is going to be manufacturing and engineering, where we have seen some strong growth in order intake as well.
Okay, thank you so much, sir, for joining in with us this morning on ETNow, giving us an understanding in terms of the outlook of the company going forward as well. That was the management of Mahindra Logistics. But on that note, let's just dip into